A German payments company is listed on the DAX 30, Europe's most prestigious stock index. Its market capitalization exceeds 24 billion euros. Nearly a quarter of its balance sheet, 1.9 billion euros, does not exist. What follows is the story of how Europe's most celebrated fintech was, in large part, a fiction. Wirecard was founded in Munich in 1999. Its original business was processing payments for online gambling and adult entertainment sites, industries that mainstream banks refused to touch. It was a niche operator in a gray market, not a future DAX giant. That changed in 2002 when Markus Braun took the helm as chief executive. Braun was an Austrian technologist with a doctorate in computer science and a gift for the language of disruption. He wore black turtlenecks. He spoke of Wirecard as the infrastructure layer of the global digital economy. Investors listened. Through the 2000s, Wirecard expanded aggressively, acquiring payment processors across Asia. It built a banking subsidiary, obtained a German banking license, and began issuing prepaid cards. By 2018, its share price had risen more than 3,000% over the previous decade. That year, Wirecard replaced Commerzbank on the DAX 30. It was the first fintech company ever admitted to the index. Analysts called it Germany's answer to PayPal. Some called it Germany's answer to Alibaba. The reality was something else entirely. The fraud at Wirecard was not a late improvisation. Evidence suggests it was structural, built into the company's operations for well over a decade. The central mechanism was a network of third-party acquiring partners, companies in Dubai, Singapore, and the Philippines that supposedly processed payments on Wirecard's behalf in markets where Wirecard lacked a local license. These partners were said to hold large cash balances in escrow accounts on Wirecard's behalf. By 2019, those supposed escrow balances totaled 1.9 billion euros. Accounts, Wirecard claimed, were held at two banks in the Philippines, BDO Unibank and Bank of the Philippine Islands. Both banks later stated they had no such accounts. The money was not missing. It had never existed. Sustaining the illusion required more than forged documents. It required the cooperation or the incompetence of auditors, regulators, and banks. EY, Ernst & Young audited Wirecard's accounts for a decade. For 9 consecutive years, EY signed off on the books. They did so without independently confirming that the escrow balances existed. Instead, they relied on a trustee, a single individual in Singapore, to confirm the funds. That trustee was later identified as part of the fraud. BaFin, Germany's financial regulator, was also watching. But rather than investigate Wirecard, BaFin investigated the journalists and short sellers who were raising alarms. In 2019, BaFin banned short selling of Wirecard shares, a move that protected the company from market scrutiny. It was the first time BaFin had ever imposed such a ban on a DAX company. The Financial Times had been publishing investigative reports on Wirecard since 2015. Reporter Dan McCrum documented suspicious accounting, inflated revenues, and the third-party partner structure. Wirecard responded with legal threats and a public relations campaign that framed the FT as a tool of short sellers. German politicians and business leaders rallied behind Wirecard. The company was a national champion. Braun called the FT reports a coordinated attack. In early 2020, Wirecard commissioned KPMG to conduct a special independent audit. The intention was to vindicate the company and silence its critics. Instead, in April 2020, KPMG reported that it could not verify 1.9 billion euros of Wirecard's stated revenues. The company said the delay was due to the COVID-19 pandemic disrupting access to documents. Markets were briefly reassured. They would not remain so for long. On June 18, 2020, EY refused to sign off on Wirecard's 2019 annual accounts. It was the first time in the DAX's history that an auditor had withheld approval from a member company. EY stated it had received falsified documents purporting to confirm the Philippine bank balances. Wirecard's share price fell 62% in a single day. From a peak of 191 euros per share, it would eventually fall to less than €1. On June 22, Wirecard admitted the 1.9 billion euros probably did not exist. The word they used was probably. On June 25, 2020, Wirecard filed for insolvency. It was the largest insolvency in German post-war history. The company had 3.5 billion euros in debt. Its creditors included more than a dozen major banks across Europe. Commerzbank, ABN AMRO, and ING were among those exposed. Total creditor losses exceeded 3 billion euros. Markus Braun was arrested on June 22, 2020. He posted 5 million euros bail and was released. He was arrested again in July and has remained in custody since. His trial began in Munich in December 2022, one of the longest and most complex fraud trials in German legal history. Braun denied all charges. The second key figure was Jan Marsalek, Wirecard's chief operating officer. Marsalek was Austrian, charming, and extraordinarily well-connected. Had relationships with intelligence services in multiple countries. 2 days before Wirecard filed for insolvency, Marsalek disappeared. He flew to Minsk, Belarus. From there, his trail went cold. Interpol issued a red notice. German investigators believe he is in Russia, under the protection of Russian intelligence. He has not been found. The collapse wiped out tens of thousands of retail investors. Wirecard's shares had been widely held in German pension and retail investment products. SoftBank had invested 900 million euros in Wirecard in 2019. The investment was structured partly through a convertible bond, a structure that later investigators found suspicious. SoftBank lost the bulk of that position. Deutsche Bank and Citigroup had also extended credit facilities to Wirecard. Both took significant losses. The parliamentary inquiry in Germany ran for more than a year. It heard testimony from BaFin, the German Finance Ministry, and the Chancellery. Documents revealed that the German government had lobbied on Wirecard's behalf in China as recently as 2019, even as the FT's investigation was active. Chancellor Angela Merkel had raised Wirecard's business interests during a state visit to Beijing. The inquiry found systematic failures at BaFin. BaFin employees had traded Wirecard shares while the regulator was supposedly monitoring the company. Some of those trades were made in the days immediately before the collapse became public. Germany subsequently overhauled BaFin's structure and expanded its investigative powers. EY faced regulatory investigations in Germany, the UK, and the United States. In Germany, EY was barred from accepting new public interest audit clients for 2 years. The firm paid no criminal fine. Wirecard's banking subsidiary, Wirecard Bank, was placed into administration. Some of its payment processing operations were sold to Spanish banking group Santander. The sale price was 100 million euros, a fraction of Wirecard's former valuation. Other assets were sold piecemeal to various buyers across Europe and Asia. The insolvency administrator recovered less than 10 cents on the euro from most creditors. Braun's trial continued through 2023 and into 2024. He maintained that he too was a victim, that Marsalek had deceived him. Prosecutors argued Braun was the architect. The court heard from over 100 witnesses. In September 2024, Markus Braun was convicted of fraud, breach of trust, and market manipulation. He was sentenced to 5 years and 3 months in prison. Jan Marsalek remains a fugitive. The Wirecard case exposed something larger than one company's fraud. It exposed the degree to which national pride, regulatory capture, and institutional inertia can protect a lie. The FT published its first serious warning about Wirecard in 2015. It took 5 years, a global pandemic, and a refused audit for the system to act. In those 5 years, Wirecard raised billions more from investors. It joined the DAX. It received government endorsement at the highest level. And the money, the 1.9 billion euros, was never there. Not missing, not transferred, not stolen, simply invented. And for a decade, everyone with the power to say otherwise chose not to look. The DAX still exists, EY still audits, BaFin still regulates, and somewhere, most likely Moscow, Jan Marsalek is still free. The largest fraud in German corporate history ended not with a dramatic raid or a whistleblower in a parking garage. It ended because an auditor, after a decade of compliance, finally asked a bank in the Philippines to confirm a balance. The bank said it had no record of the account. One phone call, 10 years too late.